Hello, this is the chart profit video. About 90 minutes into the trading day on Friday the 7th of October. Looking at the E-mini S&P from the pre-open. On Wednesday, enough time was spent at 21.54 in here to lift the minor, well it's the at least 1 month point of control or controlling price to that level. And then on Thursday we saw more time printed there, as I put it, building that point of control. And I've said on the chart you can see price action winding into that level. I've said this often happens before a break one way or the other, and so price now relative to 21.54 is an important thing to monitor, and the next directional move could be indicated by green, that's significant buying above that level, or red, that's significant selling below that level. We have a very minor improvement on the pulse chart. That is just the price momentum here coming through above zero for the spider on the pulse chart. We've also seen this on the diamonds, and as far as price momentum goes, that confirms what we saw earlier in the week from the Russell 2000 ETF, IWM, and the Qs, the four major stock index ETFs that we follow. So price momentum now just moving above zero. Breadth has still not confirmed. It remains neutral here, that grey bar in the middle indicating the New York daily breadth is in neutral territory, and that's because on the daily breadth indicators here for New York through Thursday, these two indicators here at the bottom not confirming. The New York bullish percent, I call it, which is the percentage of stocks greater than the 50-day moving average on my New York list, just about 51 at the moment. But the net new high is 25. 5-day moving average in black is still below that zero line. That gives us the neutral grey colour on the pulse chart. Both these indicators oscillating around their important levels as the market winds into this trading range up here. Not totally convincing at all. Jump straight here into sentiment indicators. This is the RIDEX assets ratio, my version of the RIDEX assets ratio, and August the 26th, just here, got above 7, and that was actually a 7-month high from this point over here. And quite clearly from the chart you can see possibility that that level could be exceeded. A little bounce in the market lifts the optimism a little higher, and the RIDEX assets ratio at that point would be hitting a 9-month high, and I think that would be significant. We're very close to doing that. It's a little worry I have. Any movement higher in the market would, I think, take that ratio above that important level. And just something I've noticed over the years, for instance back here, you can see where we exceeded that previous peak just before the market came lower at the start of the year. So I'm a little concerned about that. If we look at the bull fund assets in isolation, you can see the same thing. And as we know, for whatever reason, the RIDEX bear fund assets, if we look at those here in isolation, relatively very low. These are contrarian signals, just flagging the possibility the market will get a little too enthusiastic, and that can often be a problem. So the RIDEX just peaking above that level. Pulse chart breadth and momentum deteriorating again. And what about some key charts that might confirm weakness and indicate the market's going lower? Here is a key chart. This is Russell 2000 ETF, IWM. The 5-month point of control, we've showed it last couple of webcasts at least. 122.65 is the 5-month, and this week we've seen very clear support at that level, and that's often a clue. If you see confirmed or proven support suddenly breaking down, that's an indication of weakness. So IWM below 122.65 would I'd be a little concerned. Looking here at the diamonds chart, Dow Jones ETF, and from the high back here in August to the low, always draw that halfway point in, and we've seen some resistance there. So this chart, large cap ETF, I think in a weaker position than the small caps, IWM. And if we saw this chart printing some time back above that level, especially above the 5-month up here at 185, that would be confirmation of strength. But currently we're in a weak price location for the diamonds, so IWM breaking down I think would confirm weakness. Okay, I'm jumping about a bit here. We've just gone from the stock index charts to obviously the chart of the day. This is the British pound. Brexit fears took hold. There's been some talk that this plummet earlier today, down about 6% from yesterday's close, let's call it the midnight print up here. Haven't seen any confirmation of this. There was talk of a fat finger trade, basically a mistake. There's been a 5% bounce back, and the pound still, I think, about 1.5%, something like that, percent lower, and it's been really weak all week this week. I did say in last week's webcast that it was a very weak chart because it was below its point of control here and below the halfway point off this low, which was the immediate Brexit low. Suggested in this period here that there may be a retest of this low, and didn't honestly expect that. Here's the UK's large cap index, the FTSE 100, much stronger than the mid 250, the mid caps or the small caps. Reason being, with the large caps, the weaker pound is kind of helpful. 75% of the companies in the FTSE 100 receive most of their earnings from overseas, so it's kind of helpful. So the FTSE probably holding up better than just about any stock index or major stock index that I'm looking at right now. The big level for this is 67.23, the 4-month down here. This is the German DAX index. The major is down here at 97.50. I've talked about the possibility of this moving higher into this area here. That still hasn't happened, and therefore the 3-year value area high, which is related to this point of control, remains at 10.742. And as we've discussed over the past few weeks, we've seen a problem that the DAX has had with that level over the last couple of months. If I just take you out, zoom out a little back to last year's high up here to the low, and the halfway point coming in on this dotted line here. Currently at the end of this week we're printing below that level. So the DAX, you can see the difference between this and the FTSE, UK's index. But I say again, time spent in this area could potentially lift this point of control higher, and that would kind of unlock this value area high and immediately lift it higher, which would allow the DAX, if it wanted to move higher, whereas at the moment this is kind of curtailing any upside in the chart. Looking at T-bond ETF TLT. Again, this is something we've spoken about, this 139 level, which is the 4-month point of control. We've had this marked on the chart for a few weeks, and we had this very clear rejection of that level back underneath the halfway point off the high, put the chart in a really weak position, and that rejection has actually sent TLT almost back down to retest that low in September. So quite a violent reaction there. There is big support on the chart. It's the 3-year down here at 130.77. I'm just going to assume that the bonds here, TLT, is in a kind of downtrend until either this 4-month moves, which it could do with some consolidation here, or we get time printed back above that level. That will put it in a strong position. You can't really see much chance of that happening right now. T-bonds are oversold, but nevertheless seems more likely we'll see a test of this major support down here. Price down here would suggest that the bull market is over. GLD, the gold ETF, was trying to rally a little earlier in the day, seems to have sunk a bit. Again, there's major support at 118.22, just a little lower. Again, similar kind of chart, 3-year value area high up here, and that was a problem for the chart back in July. Then we saw the decline down to here from the high and the halfway point. We saw the test of that and the rejection, and again that rejection, as we saw on TLT, really violent rejection, and gold much lower. We've been following USO, the oil ETF, from the major low back in February to the subsequent high. You always watch the halfway point, and there was a probe below here. That's okay, and as long as we see obvious support, which we did here, and then the chart climbed back above the major at 1078, puts it in a strong price location. So this is one bullish looking chart at the moment that we can find. As long as it holds above that major point of control here, 1078, chart's in a strong position. Just wanted to come back to the gold chart, actually, GLD. One subscriber asked me to review the Ridex precious metal assets, which I've done here. You see the assets hitting new lows, as it did here and here, often corresponds to a kind of contrarian bullish signal. And then looking across to the right, we can see what the assets have done. So on this rally in gold, we've seen the assets strongly come higher. And if I just zoom in on that, we've just hit a 3-month low in the assets here. That's worth noting. Just to go over these levels again, the major at 118.22, price below that level looks really weak to me if that happened. Technically the chart is oversold on this daily chart. Got the RSI here and a stochastic momentum index. So there's quite a few bears as signified by that RIDEX chart. We're just above support and we're oversold. These major points of control, when price gets close, tend to be attractive, tend to attract a test or a probe. Right now it looks a bit like a falling knife, so until evidence tells us otherwise, I would expect a test of that, possibly a rejection. Here's the levels on the dollar index we've been following for a while, from the major high to the subsequent low. We have the halfway point, this dotted line here. It was proven here and here, and now the dollar index is printing above that level in a much stronger price location. Looks like a bit of a reversal bar today, but as long as we hold that halfway point, about 96.30, dollar index is in a stronger position here. Euro FX chart is actually trying its best to hold above the 4-year at 111.65, just managing to do that at the end of this week, and we have a halfway point a little below that, just below 111. That's off the major low over here to this high price. As I said before, below here would be weak price location, and that will be confirming dollar strength. We looked at the RIDEX sentiment ratio earlier, mentioned my concerns there. This is the public poll from AAII, and we saw the bulls percent this week was higher at 28.8, up from 24, and the bears percent was lower at 27.9, and that's down sharply from the previous week's 37.1%. So unlike previous few weeks, we've actually got more bulls identifying themselves this week than bears. In the public poll and in the Investors Intelligence poll, bulls percent was higher at 46.7, and bears percent was lower at 22.8. So again, more bulls, less bears, but not all the sentiment indicators are confirming that. This is Lipper US fund flows. They reported this week equity funds, including ETF outflows this week of $9.1 billion in the week to the 5th of October. That's a high number for a single week. But also it does take the 4-week flow, that's the black line, down to a negative 26.28 billion. That's an extreme reading, and that's the lowest since late January. If you had to base your trading decisions purely on these sentiment indicators, that would probably suggest sell-off into a low of some importance. But most important is price itself, back on the E-mini here to finish. Much prefer to see the E-mini consolidating above 21.54 in the short term. Price below 21.4250, which was the half range off the recent high, would put the chart in a weak price location, especially if we see significant selling or red on the profile marked below this level. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.